Greetings everyone, my name is Githinji from St. Paul's University. I am a lecturer in the School of Business and Leadership Studies, and I'm also in the Department of Business. My area of specialty is finance and banking. Today I'm going to talk to you about the basics of finance, just to know or to get to understand what finance is all about and the scope and the different financial institutions and markets, and the key institutions that we find in the financial system. And we also will talk about the financial instruments, mostly the things that we buy and sell in financial markets. So basically, what is finance? Finance is the money that you have. Either you have worked for it, you've inherited, and it's important for you to understand where that money comes from and how to use it in the best way possible. Because as they all say, if you use your money wisely, you will make better decisions for yourself and you'll be happier. So when you're looking at the scope of finance, basically is what or where do these people get money? Where do you get money as a business or as a person or as a corporate? Basically, most of the people, if you ask them, who did you lend money to? They'll say, oh, Kamal lent me money, or Joroge lent me money, or so and so lent me money. But basically, if you ask a business who lent them money, it is still the same Kamal, Joroge, or Otieno, or Shah, or Phyllis, or Eric, only that they consolidated the money in a commercial bank. Then one person or one business goes to the same commercial bank and borrows the money. So if you look around you and ask yourself where the money comes from, it comes from the person right next to you, only that you don't know it. When you say you're getting money from M-Pesa, M-Shwari, who put money in that M-Shwari? Is the person next to you, in a matatu, on the road, in your business, the customer that came to your business. They have put money in M-Shwari for you to borrow. So basically, money is that commodity that is moving around. And the basics of finance looks at how we get this money for capital, for use, for investment, and how we use it. Now that is where financial management comes in. It's important for us to understand personal financial management, corporate financial management, and public financial management. This is where we have public finance. Where does the government get its money, and how do they spend it? Now, we have what we call a financial system. A financial system is a platform where borrowers and savers meet. People with deficit funds and people with surplus funds. When they meet somewhere, this is called a financial system. And it is made possible by financial institutions and financial markets. Financial institutions are institutions whereby they have gotten the contracts of spending people's money. They have perfected the art of borrowing money and spending it or lending it. These are financial institutions. We have different financial institutions. We have things like commercial banks. We have institutions like insurance companies. We also have microfinance institutions. We also have mutual funds. All these are financial institutions. For people in business, you need to understand where the money is coming from and where the money is going. We also have financial markets. Who are these people who operate in a financial market? We have brokers, we have dealers, we have commercial banks, and all these institutions that go to the financial market to buy financial instruments. So a market, just like any other market, is a place whereby people buy and sell financial securities, such as treasury bills, treasury bonds, commercial papers, shares, etc. Those are financial instruments. So we have different types of financial markets. We have money markets, we have capital markets. All these help us in the exchange of funds from people with surplus to people with deficit. We also have financial instruments. What are they? They are instruments that help us understand that we owe someone. They are obligations towards somebody else. And you say, oh, I have money, I am going to buy a Safaricom shares, for example. So Safaricom will approach a financial market and sell an instrument called a share. And therefore, you will go to that financial market and you will buy that share. That when you're buying that share, you're telling Safaricom, I am being part of your company and you're giving me this paper contract called a share to show that I am part and parcel of your company. That is a financial instrument. So what has happened? The person with surplus funds has come in and given somebody or an institution money through the financial market. And this borrower will come in with an instrument, and this is what you're calling the financial instrument. So we need to understand all these things and also understand about the risks and returns in our businesses. Thank you.